The one that confuses a lot of people is the 1099-R. This shows any distribution or loan that you took out of a retirement account, a pension, an IRA. So keep in mind, this is money that's coming out. It's not showing money that's going in. That's reflected on a 5498. So a lot of times when there is a rollover, you left an employer, you rolled money from that employer's plan to your new employer's plan or to an IRA in your name. Anytime there's a movement of money, there's the potential that they're going to file a Form 1099-R. That's the piece that's showing where the money left from, right? Now, if it left and it went into your pocket, you took a distribution, you needed some money, then that's reported on your 1040, and that is taxable income in most cases. But it's when there's a rollover that it gets really confusing because it's showing that it left, but it doesn't show where it arrived until later, until May or June. That's when the Form 5498 comes out. So you need to match up that 1099-R with your account statement. If you've got nothing else to show, your account statement should show where it landed in your IRA or in your Roth or in your new employer's plan. That would be the piece of information that you would need to provide to your accountant or CPA to make sure that you have with you so you can report on your taxes. That's not a taxable distribution. You should not be taxed when the money is not in your hand. When it went from one trustee to another trustee, that should not be a taxable distribution. But the IRS forms don't really help you report that. So sometimes it takes a little bit of work to make sure that gets reported properly. Again, ask your CPA, your tax preparer, if you have questions or if you can't quite figure out how to do this and it looks like you owe a big amount on your taxes. It's probably not correct if it went to another institution. That's probably the biggest one that I see. And this is true as well on any kind of backdoor Roth conversions or contributions because of the same thing. Money is leaving one tax advantage vehicle. You got to pair it up with where it ended up to make sure that it's reported properly. So pro tip on that one. It gets a little confusing, but you can do it, I know.